Alright, what's up everyone? Welcome back to Compound Interesting. This is Emil, and as you can see, it's obviously Shit Shirt Saturday. So in today's video, I'm rethinking my position about Spotify stock. It's a stock that I was looking at a few months ago. I'll leave a video link up there to my previous video where I talked about Spotify, and the price was about $120 at that time. And I was pretty much very on the fence whether or not to buy it. And I chose not to buy it at that time. And since then, the stock has done really well. So obviously I'm regretting that. But at the time, I didn't see all the potential that Spotify has. So I just want to share with you my reasoning to rethink my position on Spotify and potentially invest. Now there's new information about Spotify and I better understand where the company is going. And even though I made a mistake not buying it at the low price and now it's jumped a lot, even though that really hurts me to buy it at a higher price, why I'm potentially considering doing that. So you might be wondering why my thought process for Shopify has changed so drastically and what has made me change my mind about Spotify. The main reason being podcasting. So that's one of the points we're going to talk about. We're also going to talk about the competition. Then we're going to have a look at the numbers, and then I'm going to give you my final thoughts on Spotify and what I'm doing in regards to this stock. Before we get going, I hugely appreciate if you could smash the thumbs up button to get this channel off the ground. It'd be really appreciated. And if you're interested in investing in stock market, make sure to subscribe. I also talk about other investment opportunities as well. So if any of that interests you, make sure to subscribe and hit the notification bell if you're already a subscriber. So with all that said, let's get straight into the video. Okay, first of all, we're going to start with the podcasting section of Spotify, which is in an extreme growth phase. Not just in Spotify, but podcasting in general is an extreme growth. I'm generally a kind of a growth and tech investor, so I do like to see great growth. But at the same time, with great growth always comes a high price. So first I'll run through what the podcasting means for Spotify, and then I'll analyze the price for Spotify, the stock price for Spotify, and whether it's justified. And you might be surprised when I put it in comparison to other platforms such as Apple Music and Amazon Music. You might be surprised at the valuation. So first, I'm not sure if you heard the news, but probably a lot of you have and will know that Joe Rogan has signed an exclusive deal with Spotify. And I saw that, I kind of blew my mind. I was like, oh my God. Because I remember going on Spotify and seeing that they had a podcast function. But I'm a big Joe Rogan fan. And obviously when I first went onto Spotify, that was the first thing I searched. I couldn't find Joe Rogan on Spotify. So I was like, okay, I'm not going to use Spotify for my podcasts. I'll just continue using this podcast app that I have. But now that Joe Rogan is going to be switching onto Spotify, I can definitely see myself not using that podcast app anymore and using exclusively Spotify. So I believe there's millions of other people just like myself who couldn't find Joe Rogan podcast on Spotify. And now that he'll be on there, and people in the future who just starting to get into the Joe Rogan podcast will use Spotify to listen to the Joe Rogan podcast. So as you can see, the amount of views that Joe Rogan gets on YouTube is astronomical. The amount of downloads that he gets on Apple is crazy. This is an unbelievably valuable acquisition that Spotify has made. And the 100 million price point that Spotify supposedly paid for this contract with Joe Rogan, I think that's well and truly, I think that's an extremely good deal in the end. 100 million for one dude talking might seem crazy, but when you actually add up the numbers, it's actually insane the amount of people who listen to the Joe Rogan podcast and the amount of people that would be brought onto the Spotify platform. And what does that mean? So these people go onto the Spotify platform. Are they spending money to listen to the Joe Rogan podcast? No, they can still listen to it for free. So Spotify just basically want to bring all these people, make them download Spotify. They'll start using the podcasting section of it. They might start listening to music using the ad-free service. So before I get into that, maybe I should quickly explain the different models that Spotify offer for users. So you can use the free model where you can listen to music and you can skip 5 songs in a row and you have to listen to some ads. You can't download songs, so that's all for free, but you have to listen to ads, and that makes up about 10% of the revenue. Or you can pay about $10 a month or €10 a month and have unlimited music, download all your music. And there's also family plans and all, but I'm not going to get into the absolute intricacies right now. I just want to get into the breaking news and the valuation for Spotify. So Spotify is still in extreme growth. They're all about user growth right now. They're not really so interested in monetizing straight away. So they just want to bring as many users onto the platform somewhat like Facebook have done in the past. Facebook just didn't worry too much about monetizing. They just thought about getting as many people onto the platform and monetize later. And that's kind of what Spotify are doing right now. So bringing all these Joe Rogan users onto the Spotify platform means that eventually they can either start serving ads to them on the Joe Rogan platform, or these free users will convert into premium subscribers. And that's how Spotify plans to make money in the next number of years. A lot of people realize that podcasting is growing. It's becoming extremely popular. However, I don't think people realize how much potential is still left for podcasting and how much room there still is for podcasting to grow. I believe that the same way the smartphone took over the newspaper, podcasting will take over radio. Now, my mom still listens to the radio every single day, and there's still countless of older people who listen to the radio very frequently when they're driving their cars. I think radio will be so small in about a decade's time, especially with the advent of electric cars, where podcasting will just be so seamlessly integrated into your dashboard. You just be able to open Spotify and play the Joe Rogan podcast or whatever. You just click onto it. Everything's going to be really easily integrated in your car and within your smartphone. So you can have your music and your podcasts all in one app, in the Spotify app. So Spotify are really changing their business model right now. They have the old CFO, Chief Financial Officer of Netflix, who is very heavily involved in the algorithms that Netflix came up with for suggestions. So Spotify are really good at suggesting new music for you, and they're trying to implement this for podcasts. So being able to make the user find podcasts really easy that they'll like. So Spotify are really going after this and making their product really good for the user. So they're looking at the long-term picture. So that's why I'm very interested in Spotify now for the next 5 to 10 years, the growth that will happen in that time. Because I don't really see profitability in the near term, but in the long term, I think Spotify is going to be an absolute beast. I think they're spending 500 million in total in podcasting between the different acquisitions and exclusive deals that they're making. I think this investment is going to pay absolute dividends in the future. Okay, now let's have a quick look at Spotify's competition. So Spotify have a few competitors, but I think there's only 2 or possibly 3 that are really dangerous. And the main competitor is Apple Music, of course. So I've devised a way to compare the value that has been assigned to Spotify by the market in comparison to the value that has been assigned to Apple Music by the market. So essentially, Spotify has 130 million subscribers and they have a revenue of 7 billion in total. So Spotify's revenue is 7 billion and their market cap is 33 billion. Now, Apple Music has 68 million subs with a revenue of 4 billion. So Apple's revenue 4 billion and Spotify's revenue is 7 billion. Now, if we divide 4 billion into the total revenue for Apple, which is 250 billion, the Apple Music makes up 1.6% of Apple's total revenue, which would give Apple Music by itself a standalone company. If Apple Music was a standalone company, it would give Apple Music a market cap of 22 billion. So Apple Music is valued by the market at 22 billion, whereas Spotify is valued by the market right now at 33 billion. So you might say, okay, Apple is a little bit cheaper. Apple Music is a little bit cheaper than Spotify in this case. However, I would disagree. So essentially, Spotify's market cap is 1.5 times bigger than Apple Music's market cap, although Spotify has almost double the users and almost double the revenue. So looking at that metric, it seems that Spotify would be a better choice if you wanted to get into the music streaming market. If you wanted to invest in the music streaming market, it'd be a better choice to invest in Spotify. And to add to that, I think when you're buying Apple, you're not just buying Apple Music, which is in extreme growth, just like Spotify is in extreme growth. You're also paying into everything else that Apple sells, which is really good, although isn't in extreme growth. You're buying all the baggage that comes with Apple, whereas Spotify is just pure growth at the moment. And finally, Spotify is still the market leader, and I believe in the end, Spotify will remain the market leader in music streaming and podcast streaming. And in the end, I think it will be a duopoly with some very smaller players at the end. So I think Spotify will be number 1 and Apple Music will be a moderately close second, almost somewhat like Coke and Pepsi. And then Amazon Music will lose market share, and the others, Google Play Music and YouTube Music, will also lose market share in the long term, is my estimate. I think Apple Music will do well because it's easily integrated into the iPhone. However, I think Amazon Music, the only useful integration is with the Alexa, and I don't think that's enough to make it a serious player to Spotify when you can easily put Spotify through the Alexa as well. However, Apple Music is very good for Mac users and iPhone users. However, it's still very easy. Most people can easily download Spotify from the App Store, but I don't think people really are going to download Amazon Music from the App Store as easily as Spotify. And just like that, I don't think Android users are going to download Apple Music from the Google Play Store. They're going to download Spotify. So Apple Music is kind of only fit for iPhone users. And I think iPhone users, some of them will still use Spotify as well. Although we are looking at Apple and Amazon can both lose money for a lot longer than Spotify can lose money, because Apple and Amazon Music just have extreme amount of cash on their balance sheet. They can lose money for years. So this is a potential advantage that they have over Spotify. However, just like we'll see when I go through the numbers, Spotify has no long-term debt. So any short-term troubles, they can take out a line of credit pretty easily, and they have a little bit of cash to weather any short-term storms, and they can continue to lose money for the next 5 years as their numbers continue to grow. So another comparison that has been going around, and that I'd also like to include when analyzing Spotify's market cap and value, is the comparison to Netflix. So Netflix was in extreme growth for the last 20 years and is still in extremely fast growth. So I think Spotify are just at the cusp of getting more and more users onto their platform, paid users onto their platform, like Netflix were maybe 7 or 8 years ago. And Netflix valuation, Spotify have a price to sales ratio, an average price to sales ratio of 4, and their current price to sales ratio is 4.5. Netflix's price to sales ratio average is 8 and current is 8.7. So why does Netflix, even though it's at a later stage in growth, have a much higher price to sales ratio? The only other reason, apart from Spotify being undervalued in comparison to Netflix, is that Spotify has lower margins than Netflix, and Spotify has to pay out an enormous amount of its revenue to the music license, the licensing fees for the music. However, with the podcasting, I think this will generate higher margins in the long term, and Spotify won't be so much at the mercy of these music licensing fees. Every song that goes out, 70% of the revenue of each stream is paid out in royalties to the music licensors. Lastly, about Netflix also have huge competitors. They have Disney Plus, they have Apple TV, they have Amazon Prime Video. They have even the exact same competitors, but are still at a market cap of 180 billion, whereas Spotify's was 33 billion. I think the comparison of Spotify to Netflix 5 years ago is somewhat valid. Alright, so now let's have a quick look at Spotify's numbers. So like I mentioned, Spotify have no long-term debt, which is something I love to see on a balance sheet for a company, especially a fast-growing company like this. They have 2 billion in cash and about 2 billion in short-term liabilities. So basically a 1-for-1 in assets to liabilities. So the balance sheet is pretty good, especially for such a fast-growing company, and it means that they can take out credit whenever they need it. In regards to profitability, Spotify have been profitable in the past, so they've proven that they can be profitable, but they're still not interested in being profitable just yet. They believe they're nowhere near their maturity and they have a lot more growth to go. And I totally believe the CEO when he says that there's enormous potential. He's mentioned parts of the world that they haven't even tapped into, like India with 1 billion people that are just starting to become into the second world. So that's 1 billion potential customers of the future, as well as Africa and other developing countries. So as you can see, Spotify have been growing at crazy rates the last few years. So this is their revenue growth in blue and their operating expenses in red. So I'm more interested in their revenue growth percentage. So as you can see, it's hovering around 30%, down from 40% and now around 30%. And for the next number of years, it's going to remain above 20% expected. So that's really good growth. So that's exceptional growth. And their user growth has also been in that 30% range. So their free users are growing slightly faster than their premium users, which of course you might think, oh, it's better to see premium users growing faster than free users. However, it's just, that's all those free users are just dormant premium users of the future. When I first started using Shopify, I was also a free user, and I just got so sick of the ads that I tried out the trial or whatever, started using it, and I was like, okay, I'm never going back. Spotify is amazing. I love having free music whenever I go, whenever I want, wherever I go. And for €10 a month, just easy to do. So I think all this growth in free users, this is something that Apple Music doesn't have. It doesn't have all these free users. So the numbers that I mentioned before, that was just the premium users for Spotify and Apple Music premium users. The numbers for the free users, I didn't even take into account in my valuation of Apple Music. So that's another advantage. I think a lot of those free users, not all of them of course, but a lot of those free users will eventually convert into premium users, which is Spotify's business model. So Spotify is still the market leader, and they're doing this with many strong partnerships like Square and Crypto.com, and they own 46% of Tencent Music, which is the Spotify of China. So Spotify are really going after really strong partnerships. You might see like there's so many different things that offer you free Spotify if you sign up for this or however, or integrating with BMW electric cars in the future. So I think Spotify will remain the leader in partnerships, which is really important for long-term sustainability and growth. So how will Spotify be affected by COVID-19? Well, they've been affected a little bit, but so I think in the end, COVID-19 will accelerate the transition to Spotify. I think a lot of people who are stuck at home would sign up for Spotify. As people are exercising more, they have more free time to actually try out the service. Yes, and a lot of people are getting free money from their governments. Yes, some people may have lost their jobs and might cut Spotify in the short term, but I'm sure when the economy recovers, they will be coming back onto the platform. So I believe the COVID-19 situation might be an accelerator for Spotify as people start to have more free time to listen to podcasts and get into that and then continue using it when everything opens back up. So finally, I think Spotify's algorithms are better than any other algorithms out there. Apart from perhaps Google search and YouTube search, Spotify are really, really clever with their algorithms for finding new music. And I think this will help with their podcasting service. And I also think the Joe Rogan deal, although it might be a loss leader, so essentially where they're losing money on the deal to bring people into the platform. So a loss leader in a supermarket is like selling bananas at 50% the price that you paid for them and putting them at the very back of the shop so that everyone has to walk through to get the really, really cheap bananas. They have to walk through everything else in the shop and they'll probably pick up something else along the way. So that's what a loss leader is. So I think the Joe Rogan deal might be a loss leader in the short term, but bringing all those people onto the platform, making them see all the different podcasts that are available and the music that's available, in the end will generate much more revenue. Okay, finally, what are my thoughts on Spotify? So I think it kind of goes without saying that I'm extremely bullish on Spotify now. I have picked up a few shares over the last week, despite the fact that the stock price has jumped up 30% and even 50% from its lows in the COVID-19 situation. Obviously, I'm gutted that I didn't buy it when I was first looking at it, but the story has changed so much. And I think podcasting is going to revolutionize the radio and the way people consume information. And I'm really, really bullish on podcasts and the way Spotify is going after them. So for that reason, I've already picked up some shares and I'm probably going to continue picking up some shares, and I'm looking to make Spotify a medium-sized position in my portfolio. So you might notice, like in most of my videos, all I say is either I'm not interested or I'm going to make an initial position in this stock when I'm not so super certain about this stock. However, with Spotify, I'm definitely willing to make a larger investment into Spotify. This is just what I'm doing, but I think Spotify will be worth hundreds of billions in the future, in 5-10 years. So I'm willing to make a larger bet. And if Spotify's stock price drops down again to any previous levels, then I'll really load the boat and potentially make it a large position of my portfolio. If you want to see my previous analysis on Spotify stock, I kind of went through more of the details and the fundamentals. So I'll link that up there. So have a look at that because I didn't get to go through everything in this video. But just in this video, I want to go over my thought process and changing my mind about Spotify and the podcasting in particular. I'm really excited about Spotify, and I think it has a really bright future. But make sure to do your own research if you're interested in investing in this stock, and potentially actually use the product before you go and buy the stock. But I'm a big fan of Spotify, and Hyperchange, Galileo from Hyperchange really opened my eyes to this app that I use every single day, every morning, every night, every time I go to the gym, every time I go for a run, how much I actually use it. 44% of Spotify users use the app every single day. So there's enormous attention on this app, just like Facebook used to have. So attention equals money in this time. The more attention Spotify can bring, the more money it can generate. So for these reasons, I'm really bullish on Spotify. I'm going to keep a very close eye on it. And if there's any significant dips, I'm really going to start, if the fundamentals don't change and nothing changes and the stock price dips, I'll definitely be adding a good few more shares. So that's what I'm doing. Let me know what you think of my analysis and what you think about Spotify. If there's anything I missed, let me know. If you enjoyed the video, I'd hugely appreciate a thumbs up. And make sure to subscribe if you haven't already. I'm really looking forward to seeing you in the next video. Thank you so much for watching. I really appreciate it. And I hope you enjoyed the video, and I hope you learned something. So with all that said, take it easy. Cheers.